All right, rock and roll. You be in here, sweet. All right, give me a second here. Okay. All right, cool. Fast finger flash. All right, I'm going to go over the euro Australian dollar pair here real quick. All right, so make sure all of this is working. And okay, all right, so that's good to go. All right, so what I have going on here is on the left side, I have the euro on a monthly versus the dollar, and I have the Australian dollar versus the US dollar. And these are monthly charts. All this is I'm just gauging the possible reaction to the dollar. The euro is the biggest bite in the dollar, so if the dollar goes one way, the euro's correlation is going to be pretty high. The Australian dollar is not as high, but you get if that dollar takes off, the Aussie should drop, that kind of thing. Firstly, you're in a time zone. As I say, the sun's overhead, okay? So you're looking at the euro in a different eyeball than I am. When the sun is over my head, I'm looking at the dollar, but the euro, okay, so in your case, you're looking probably at the euro first, then the dollar, or what have you. I'm looking at the dollar and then the euro first, okay? So things can change, wave, higher in Europe and lower in America, and that kind of, sometimes you can get follow through. But this is just a reference to where the euro's at. Obviously, it's weak. The Australian dollar, obviously, it's weak, okay? Then over here, I have the euro and the Australian on a big picture for a monthly also, okay? Let's see here. That's all the data I get on it, huh? Well, that's all the data I get on it. Okay, so first thing, let's take a look here at these bars. These are monthly. All right, so last month, August, dipped down below previous levels here, okay? So it poked its nose down here. There wasn't any follow through, okay? Then you have it working its way to the upside. Now, it doesn't have much to clear it, and that's the pattern that we're playing off of. This doesn't really show it, but I'll just say that we'll break it down. That we'll just say that we'll have one pattern that's an inverted head and shoulders. The risk is going to be up in this area. Now, when you do a head and shoulders, let's see if I move this out to weekly, if it comes, and daily. Whoops. Come on, you. What the bunkers? Well, that's just not right. Whoops. All right. Okay. One more. There we go. Okay, so let's just, one pattern here is we have an inverted head and shoulders. We'll say right shoulder, left shoulder, head, right shoulder. That's the first one. Now, if we take it from the low, which we'll just use round numbers as 148, we'll say, up to this level, okay? What are you at? 148, 148. What do I got going on here? Okay, inverted head and shoulders. All right. Oh, excuse me. Come on, you. Why are you not using the daily? All right, I can eyeball it. 144 to 149, we'll say. So it's 500 pips. So your risk on here is 500 pips. Is basically up into this area. Okay, so if you stay on the short side of things, your risk could possibly be at least another 500 pips higher. Okay. Now, when we bust this down even further, okay, it's running hard. Okay, so what it did was, this is the head, came back up, came down, failed to take out the head. Okay, so it failed to follow through to the downside, and this is the chasing after it. Okay, so now we bust through the top. So there could be a pullback down to this area here, just kind of a retest of this area as resistance, okay? See, I used a 6-hour chart and it was better. Okay, so basically we have, you know, you kind of have to look at it as, I'll go to the next chart. Okay, here, this one's a little bit better. Okay, so here's a weekly with candlesticks on here. These are just Bollinger Bands at 21. I just threw that in because the chart actually defaulted with a moving average of 21, so I just put in a Bollinger Band it gives me targets, right? Here at the high, we had a high tail, a wick, jab through again. So I assume, you know, if this decides to run through the moving average, and this is a weekly chart, that would be, you know, that would be a target on here, besides the moving average part. And these are stop and reverse, just basic, like your Q2 default kind of thing. It's just a reference. It's just giving me an eyeball reference here. You also have the other pattern that's coming down here, working on a triangle. Okay. Now, down below it here, I have a ADX. Now, an ADX tells you if you're trending or not. Okay. So I shortened it up to about 7 periods because this is a weekly. So if you hear something like, oh, it's 3 weeks down, and then all of a sudden it goes 4 weeks up, it's that kind of thing. So if it's, say something is 3 weeks, you know, we're getting a period here where we get a bottom, come follow through, 2 weeks of pullback, and then we blasted through it. So the bias is going to be to the long side on here for now. First off, the Australian dollar is going to open up. It was beat up pretty hard, that and the New Zealand dollar. So those are gonna open up a little afternoon my time. So it'd be whatever Tokyo time is for you, or Wellington. Go type in Wellington. There you go. Start with Wellington, or if you can find Archipelago, start there. I believe that's where didn't they put the servers on there or something? I can't remember what it was, because it was the cutoff time at midnight or some deal, whatever. All right, so here we are on cup of Java. Oh, look at you guys. All right, so okay. All right, so the possible breakout. Let's see if we break this down further from the weekly. Okay, so here's the daily. Okay, now the ADX, basically it's turned down. Okay, there's 2 parts to it. They're basically 2 RSIs. The red one, when the red crosses the green, the bias is down. When the green crosses the red, the bias is up. And then you get how far apart they are, and you get the ADX part of these quote-unquote DMIs. Okay. All right. DMI plus, DMI minus, whatever. Okay, so, all right. So here you have, okay, let's take a look at this here. Okay, here you have the green crossing the red, okay, and you have the ADX moving up. So this basically, when it moves, you basically is telling you have a trend, okay. When it moved up after the red crossed, the red kept, you know, you're in a trend. These dots here, the average trading range, or SAR, stop and reverse, as the price, as the decline increases in amplitude, right? I think so. All right. Or voltage, I don't know. I didn't take electrical engineer, but it's basically the same principle, okay? All right, once the descent increases in its velocity, no, physics. All right, the dots increase, okay, and when they get whacked, like they got whacked here, then your trend changes. This is how this thing works. Dot 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 with the sideways, and then it picked up. Okay. So we're back to this here. So it blasted through the upper end. We got our first dot. So technically, if you go long, you can use this as your hard stop. Okay. I'd like to leave this as, what account am I using? Am I using my dum account? Do they take trades now? Okay, sell. This is a dum account, right? Yeah, demo. Okay, does this take it now? Okay, after I read these fine words, it does not take it now. So the servers aren't ready. Okay, so what I would do is it's going to put a bio. Damn. Okay, so they don't take it now because it's 5 o'clock in the morning on a Sunday. Servers aren't ready, bastards. All right, so what I would do is I'd actually short here. Okay, how about a trend line? Trend line. Oh, that's these guys over here, right? All right. Oh, good. That would be a short. And, oh, not you. Oh, man, do I got to do this every time? All right. I'm just playing with the, okay, first off, I purchased one Windows computer years ago. And I'm running this on a Mac. And so, stability issue, blah, blah, blah. But the thing is I like the charts. One of my retail accounts, I go through Wanda. First off, I found them when the CME closes with the futures, the spot stuff is still open. At the time, my research was costs. Say if I make 800 trades a day. Okay, now we're talking Forex, right? So you take, say, 6x6 pairs or 8x8 pairs. That's 64 pairs. And if you take 64 pairs and say 20 minutes a trade, all right. So that's 180 trades an hour. All right, a slot machine goes around, oh my God, every 3 seconds. So that's 3 times 60 is 180. Right? 3 seconds. No, it's the other way around. So 20 spins a minute. So is it 1,200 spins an hour? Okay, so if your slot machine is on autopilot, that's 1,200 times an hour, I think is my math. It's 5 o'clock in the morning here, so, and it's a Sunday. Like I told you in Saturday's video, by Friday I'm pretty Looney Tunes. Okay, because I get up midnight London time. Yeah, 2 hours before London opens. No, I get up midnight at my time. So what is that? 7 a.m. London time. There we go. AM. At least 2 hours before the market opens. Okay, and then I put on my trades and then I feed them to Americans. Hold it, that's me. I mean, okay, if gold is down $20 in Tokyo, gold is down $40 in Europe, I'm going to guess gold is going to open at the lows in America. And then that's when I cover my shorts, okay? Depending upon how the thing plays out. Back in April 4 of 2000, John Lothian, nice guy, tall, nice guy, he set me down on the floor, little tour thing at the CME, and I stood in front of the S&P pit with, I think the NASDAQ was behind me. And I stood there and watched it, and it was, the S&P went limit down on this April 4 of 2000, went limit down again. This is the same day. And then it went triple limit down. Oh. Triple limit down, and it came roaring back. And what that was the first time a lot of people heard what a hedge fund was. And Fox News was out in front. I didn't say anything. I should have, though. That's what I was going to say is the NASDAQ is going to lose half its value in 18 months. It took 9. So do we give Kevin 50% credit? But then, of course, with my luck, it would have been some sort of talking face on Fox. And I'm lucky my segment would have only been a few minutes. All right. So back to this here. Where are we at? So Euro doesn't do the... Okay, so these would be... All right, we looked at the big picture here, right? Big picture, it's basically trading down. What you want to have happen here, of course, on the short side, is you want to have the euro come down. So the euro US dollar, you want it to head towards, I don't know, 108, 104. That would be nice, right? That's what I'm aiming for, with no more than 116, and that's just due to the fact, depending upon if we unwind some euro, okay, we're at 111, 112, 113. We're kind of stuck in, we'll just use 200 basis points as a range here, 11 to 13. Okay. So I'll use that 13 to 15. I think I used 15 as a upper end in December's videos. Okay. When it came off the lows and I said, hey, jump on the euro kind of thing. The Aussie dollar, it probably has one good bear leg down, and it's going to go back to the 2000 levels. So you want the euro to drop and you want the Aussie to drop. In that case, what it'll cause is, obviously, it'll add to the whole dollar situation. And the only buffer I can see with the dollar is that oil heads higher and the Canadian dollar goes with it. Then we're back to the yen. The yen, in my eyes, there's not much more to the downside. I'm not pressing the downside. I kind of like the long side, because what I'm looking at, okay, is that whatever happens in equities, if we drop 20% or drop 3%, whatever, I'm looking past that. I've been positioning myself, technically I've been positioning myself short since May of last year. And the only reasons why I'm out of a lot of stuff is because of the prices were hit. Time is a little more difficult, a little more challenging. I can look forward and then use macroeconomics and things of that nature. But I'm basically waiting for the herd to show up and hurry up and dump prices to a level that I'm looking for. Like the Apple situation, right? 3 shots at 134 short, and the earnings, the cover was at 97. It gapped over 97 and opened at 94, covered at 94, ran back up to 121. That was a retest. And then the shorts there, and then we're back down to this game. We're basically in a secondary distribution. All the wrong people, I think, are holding Apple, right? Warren Buffett comes to mind. For the longest time, he said, I'm not going to own technology. I think he owned IBM. Okay, so back to this one. So we want the Australian dollar and the euro to fall. Okay, so this is on our monthly. We go back to the weekly. Okay, so here's a weekly. These lines weren't pegged right. We use the bottom of the candles for at least an alarm for trigger to go short, because once this support is broken, it should drop a lot further. 2,500, 2,000 pips, 2,000 pips more. Okay, and if you take this one, what are we talking? August to November. So basically the same period again. And how many pips is this? 66 to 46, we'll say. So this is 2,000 pips. So if it's going to drop 2,000 pips, this is going to be the minimum amount of time. But what it would do, though, it would fall the distance and then some over a little more time, because what it is we can say it'll fall 3,000 pips. Okay, once the two of those decide to roll over. Okay, so basically we had a series of lower highs. Okay, then we have the daily. The daily's looking this way, right? So we have two pretty good bars. They're chasing after this thing something. Well, I think they're covering. They're covering something hard, which means I'm going to say that it should get to 151.5. We'll sell them there, and it doesn't take it. Servers are still not on. That would be a spot that I'd throw whatever out there. Let me do this too. One-click trading, right? You put up, good. And then what account is this? 10,000 units. No, let's go to 1,000 units, because this is the count I'm using. I use dummy accounts because if I use real accounts, it's real money, right? So while I'm farting around here, and of course, this one isn't on my radar, but I will, today's afternoon webinar at 2 or I'm not sure what time, because it's Sunday, right? You do the Sunday thing with family and that. So I'm not sure if I'll start. My thing is that I would be ready for bed about 60% through the webinar. And, by the time the webinar starts, I would have already been up for 14 hours. Okay, so, and it's Sunday, but Kev, you got 2 days of sleep. Come on, mama. All right, fine. All right, so I'll hang in there for as long as I can, the webinar deal, because I need to get up basically early for the business day. Asia's okay. They go to lunch and the market closes, which is an interesting dichotomy in mental. Say if we shut down New York for an hour and a half, or Chicago, or how about, you guys get on the same page, right? All right, if they shut down for 90 minutes, that could be interesting. Now, the only shutting down I could see now is some sort of power outage or that kind of thing where it's mechanical, or Mother Nature, or rule-based, where you have limits, limit down, limit up. Percentages, I think we have a 3 or 5% overnight caller. I'll take a look at that before we go. And then, Kevin, let's do this. What am I looking for? Chat. Yo. All right, cool. Rock and roll ski. All right, so back to my little fun and games here. I forgot I could do this. Draw an arrow. Good boy, Kev. Good boy. Now, that was your crack, actually. That was the top. That was the spot that you needed to reverse your position and get either cover or get long. That was it. What I use is I don't use the upper wiki area. I use the like the tops here. Yes, hindsight, blah, 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 whatever. Okay, so then the same principle up here. Whoops, I need to go to draw, arrow. I find where would it be without using Fibonacci's and stuff. So here's a level. It's a little bit high. I guess you could use that one too. These would just be just quick mental stopping points. I haven't put in any Fibonacci's. I haven't done any of that. But the thing is the amount of acceleration here, even off of this one here, okay, I have to believe that I believe, just judging by Friday's action, not as much as the Australian dollar because it moved at a hell of a clip, but more of maybe the euro will drop over in Asia. But we'll see in a few hours here. But remember, like I mentioned in yesterday's video, the futures and the cash, we're running at a a premium and discount kind of thing. So the cash side of things, either the futures have to come back green, and by the time they open are about the spot, or actually what will happen is IBM is traded on multiple exchanges. General Electric is multiple. There used to be a website called, is it downloadstocks.com or something. You type in a symbol and it'd tell you all the exchanges that the stuff we're trading at. Because what will happen is by the time, because say Unilever trades in London and blah, blah, everything gets adjusted. If there's 500 pounds or 500 euro note laying on the ground, someone's going to pick it up. All right, so by the time it gets to America and the little bell goes ding, 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 you're within a few minutes of the high or the low for the day, basically. That's why there's some people use the 1 hour deal. They go with whatever the 1 hour breakout is. If it breaks out higher, they go with it higher. What you're doing is you're looking for a trending day. Most of the time, markets are sideways. Take a look at this one here. This is a sideways action. This is a sideways action. You had a trending period up, sideways action, and trending period down. You look at the whole thing going back to February, basically sideways. Here's another one here. I guess you could look at it too on this daily euro odd. Here you have a shoulder. You have another shoulder. I don't do it that way because price is actually coming down. Head and shoulders tops are tops, not head and shoulders middle area continuation pattern. Okay. Yes. So there you have, it's basic. This is either plus or minus, off and on, that kind of thing. So, all right. So now we're going to break this thing down even further. Okay. So that was basically your bodies, more bodies, draw the way through this. And then you cracked your little dot guy there, your SAR. So this is where, ding, you're either covered or go long. Okay. What I like to do when I'm day trading, okay, and when I'm in the swing of things, or when I'm in harmony, it's just like rowing a rowboat on a still lake. It's just, it's just smooth. I'm in a different zone. I can listen to, like, say, jazz. I can tap my feet. I can think about other things because my head is in one place, my brain is in one place, my body, which is using just my eyes, and to click is basically doing that, okay? And it just clicks. And I could take a 1 minute chart with an RSI on there and buy one, and we're talking, if we're trading like Dow, just say take 5 to 8 points every minute. That kind of 5 to 8 points, 5 to 8 points, 5 to 8 points. I mean, you take it. It's because, if I'm doing 800 trades a day or whatever, 60, it adds up. Those dimes difference between brokers add up. And that was for me because I started on the floor and mine was just to take little bites, and I am older. I take the swings now, but I love the commodity side of things. And just like with currencies and interest rates, is that they trend for a long period of time. Natural gas, I'm looking at it, my strategy is to go up for the next 4 years. By in 2 years, it should be trending, and then you will get years 3 and 4, the blow off. And just like if you've ever looked at the chart of soybeans or any of corn, oats, maybe wheat, what other ones are kind of funky? Those will work. The eggs, soybeans in particular, that's quite noticeable on your chart. Those are 900% moves, straight up. You buy beans at $6, you sell it at $10. Your margin's a few grand. It's a $20,000 move. You can buy beans at $6 and sell it at $8. And now you're making 10 grand on, say, 2 grand. Okay, and that's just straight up. You buy options. We'll just say options. You're buying options. Okay. Well, I guess I could eyeball that kind of stuff. Rock and roll ski. Oh, there we go. Wow. On the big picture saying hand shoulders, blah, 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 blah. Okay, yeah. Now considering though, now we had a pretty good move. We clipped all of these here, so I have to assume that they, where's my volume button on here? Do I have a volume button? Come on. Whoops. Mouse, go to mouse. Volumes, right? Oh, look, volumes. Okay, so on a weekly, okay, so this is just volumes for ticks because it's currencies related. Not much here. Okay, so they kind of gave up. Let's see if we get some sort of pokey stuff here. All right, so we had a little pokey action here with this tail. Okay, they bought the sell-off, they went higher, it failed. Okay, they failed to take out the highs. So this is basically a swipe of the stops back here. The strong hands came in because this is basically a secondary pullback. So you could say like an ABC wave, secondary pullback of this move. They held in, they got it past the Bollinger Band. That's usually on the third one. Uh-oh, here comes the secret, kids. All right, one secret. Here's a secret. I play Bollinger Bands by thirds. I'm sure it's in a textbook somewhere. But I poked through the first time. Now we're making a shoulder, a head, another shoulder. Here it poked through I guess it poked through a second. Here's the third time. I would have sold some up in here and then held on, I think, probably. Just due to the fact that how many of us, when we get out of a position, that's 100%. sell it all, sell it all. Well, that's, and all of a sudden you're looking at it going, oh, and that's what usually happens though, is that this amount of time was pretty much this amount, but it was shorter, and that's usually the first wave is like, okay, the first wave is basically hitting the computers and hitting some people to hit some stops, and it's usually the volume pullback here, like this is going to be lighter, and then more follow through. Now all of a sudden you're taking out the highs. The computer says, hey, this is an inverted head and shoulders, and you run it up to the distance about the neckline approximately to the bottom, all the way up to where it's at. It pulls back, it goes up again. Okay, ta-da! It's basically, it took out the wick, then it paused. Okay, we're getting some. We're probably back up to the upper level again to break it out to the upside. Oh yeah, we were, because remember that. Try to follow one thing, no more than two. The brain can only handle 6 things. So if you have 2 things, now follow me on this one. If we have 2 things, we have the euro and the Australian dollar. We have to know where it's at on, say, like a daily, a weekly. We know it. If you wake up on an island and they say this is trading at 137, you'll go, hey, it's probably a buy. If it's trading at 157, you're going to go, okay, this is a sell. You'll know it, just like flashcards. Buy, sell, buy, sell. Okay. So there's 2 things there. Now you have to know plus or minus. So now you have the one pair, the 2 things, and then now all of a sudden you're looking at, is the euro going up and down? Is the euro going up and down? If this thing is rising, okay, so what happened here? Well, we know on Friday that the euro went up, and also we had, well, I guess Thursday, Friday into it. Yeah, this is for a few days. Thursday, we had the euro go up, and we had the Aussie dollar fall. It was perfect. This is basically perfect. Okay. All right, so on the move up, we have the move up. We have where the strong hands came in and took it, blasted it past the Bollinger Band, got it back up to this area, but it failed once again, and it came in. If it comes back through, basically, here's your little alarm system, plus here's the Bollinger Band, right? If it pokes on through, all right, this would be a huge failure up on top, just like the pattern you're looking at. It'd be a large sideways pattern, and it'd go down, or large, sideways channel, and it would probably go down to the lower end of the channel, back down, and hey, look, here's our frickin' line. All right, so there's our line. Okay, so that would be just a resting alarm or sell. I guess if I had my thing on here, I would add one here. Okay. Dang, didn't like it. There's money in that account, right? All right, so, okay, so we have this going on. We have a strong move here. Okay, so the amount of chase going after this, what I think is going to happen, though, is I think we're probably going to get a bounce in the Aussie dollar. I'll have to look at what data they have. We can look at the chart again here too, because it was beat up pretty good here. Okay, so here's your monthly. Here's your weekly. I think it was. Whoops. I need to get rid of view. Okay, so it had a pretty good drop right here. Okay, so here's the next levels. Come on, yeah. Does this work? Oh, yeah, bugger. Come on. You move? You don't move? You don't move? I don't. Pointer? Oh, wrong pointer. Wrong software. No, that's a pointer. I can't move my lines. You piece of shit software. All right. How about you go to yours? You're paying the software for you, banana head. All right. So I got my little pointer. One pointer. Pointer. Drawer. All right. Here's this. Now, the thing you have to be careful of is this works out here too, is that even though it clips this, there may be a stall here. So it's one of these where you short it and all of a sudden it falls. What do we got? 74, what's this? 25, falls 50 points and stalls. Okay. This, you can see how it's, it's all, pretty evenly, and then you had the hard sell-off here, just like back here, you had a hard sell-off over Brexit, but it came back. Okay, but this is my everything after the Brexit. Anyone who basically, actually, whoever bought the breakout, I think is they're gonna hurt in kind past Friday. I started in June 20th before Brexit and said, look, start positioning, Take a look. It hit the high again here. The Aussie dollar came through, went through again, tried one more time. You have basically what is known as a 1-2-3 pattern. Okay, so when it busts again, breaks back down through, it's basically the same type of deal. What are we talking? 300, 400 pips. So now we're talking going down to 72 area. So about down into this area, probably somewhere between here, and we'll just put it through here. What's that at? 72 and what was that, a half? 72 and a half, then we'll say here, okay, which is, carry it out, Kev, be a good boy. 73.80, okay, so on the short side. So what I'm looking for is if we get, if by chance we swipe, now remember it's, okay, so how many points is that? It's 41, 54, 41, 54, so where are we at? 50, 70, 40, so 70 pips. Okay, so anywhere from 50 to 70 pips lower on the Aussie is where I'll take it as a press. Okay, the scaredy cats and maybe a stall here, 50 to 70 lower. Okay, and then but I was thinking of some sort of bounce, just a bounce, because for the bears to win, it would be nice to have these things bounce. But then they'll get sold into, okay? Because what we're looking for is, say, for example, we go, okay, now we're going down. Any type of strength, there's going to be some selling on there. Now, how about this one, right? Mom and grandma whatever, day 2 people, right? That was day, or let's call that Friday is 0. Okay, so this is day 1, you know, or history. So this is day 1. Everybody who might be in the know going, shit, the futures were down hard. After the close, stocks are going to come on. I need to get out. Well, you have some people where the mutual fund is at the end of the day. You know, some people might be able to unload in the morning. But you're going to have, I got to believe you're going to have more sellers than buyers. But it won't take much to move these markets, the futures now. Just like we've seen in the other commodity. If I, okay, I'll put my head back into the deal here. Say I'm managing, we'll say, just, okay, even millions. we won't try and pick a big number. Okay, all right. Just enough that I needed to try and get a defensive posture over approximately 3 months. Okay, I needed to get my, but one way I own, say, 100,000 shares of this stock, I would probably write options against it. One, to get out of it, okay, sell these things, you know, 5, 10, 15% above where it's trading at into the swing higher after Brexit. Take that money, if by chance things did pause and they didn't go high, take that money and buy puts that would go out, quote unquote, like I said, till May. All right, so whatever it takes, so I can still hold on to the position. The downside is when you're a money manager guy, you have, remember, this is other clients' money. If they call up and say, hey, I'm just scared or going through a divorce or whatever, you now have to unwind it's their money, right? In my case, I'd have my biggest sell, just like I had to sell to everybody in stock charts and chats and twits everywhere I post, social stuff, is to convince the masses who have been in this for a long time that you might need to think about this a little bit for the next few months. And as the herd mentality, when I'm, you know, if everybody's, okay, think of a ranch, the animals are all penned up, and you have that big cross thing that they or the, what's that bar thing, where they put the horseshoes on. You drive through the big gate, you know, and it has like Bob's Farm on there and stuff. But sometimes there's always something that's kind of squeaky in the wind, a license plate dangling, or a metal hook, you know, that's kind of getting rusty, and it just squeaks in the wind. You have all that noise, and all the animals, we'll use cows in the pen, all right, or steers, we'll use them, or bulls. Yeah, okay, they haven't been steered yet. I haven't steered them yet. All right, so no, Kev, you don't do, remember, you don't do the work. Somebody else cuts the nards off. Okay. All right, so I have to, you know, turn my ship get a little more defensive, and then put on to take something to take advantage of this. Tell my clients, go, look, you know, if you're going to need your money here, you're going to need to get it out of here in July, because I'm going to hold this thing through at least November. And if it does crater, you know, I'll do my best to make sure you profit on the flip side, and all the way out to May. And why I picked May was just, it was, I tried to go 9 months out. You do have, you know, you have your quarterly option. I'm in May, which leaves June. You have your rollover. You have all this other stuff. I'm not paying for the June part of it. If I need to do something with the Junes, say, for example, the calls are working and I say, hey, I'm not sure, I'm running out of time. I could write, or covered puts, write puts. I could write other puts and then buy the calls on the flip side for like June, or go further out and go, you know what, I think we're in a, 9 months basically selling off. Some of these have been selling off even earlier, 14, 15. I want to own it for going forward for the next 7 years. Because I have to look at it that way, right? Okay, I mean, if you cut stocks in half in 4 months, 2, 3, 4 months, cut stocks in half, I'm immediately going to, okay, I have to look at this as, and buy. Remember, when we're out there doing this, somebody's on the other side. They're either closing out their position or they're opening up one too, So everything matches up. That's another thing with futures. If you're losing it, I'm gaining it, and vice versa. All right, so back on track here. Yes, Kevin has that evil gene. I'm not sure where it is in my chromosomes. But his focus is what? Somebody get out a stopwatch. 1,000, 2,000. Tangent! Ooh, look, squirrel. All right, so here we go. So if there's anything, okay, to get out of your positions versus the Aussie, here it is. It would be some sort of bounce, but I think it's going to continue on, and it should. They have both on the macro level. They have both their commodities. So if commodities come down like coal and stuff, it had a bounce, but if it comes down here, you have basically double top. And then I'm going to guess it's going to come down harder, because by then the dollar should be swinging here. We've cleared 97. We're on our way to 103, 104 on the dollar. Okay, because once this thing shifts gears, we're not going to be able to stall it until we go into a recession. Okay, dollar takes off. Euro's working on, all of a sudden it's 109, 107. There's no 115 in the playbook anymore, and they'll stall on the QE because they're getting the markets, us, the speculators, and commerce in general are doing their deal. Of course, I'd like to see the Swiss, I long the pound. I'd love to, the Swiss franc to fall apart. And then, I like to short the yen's strength via, say, like be long the pound yen. So I'm looking at that on a pullback. Okay. So here's this. Now, if we go to the euro, click, click, click. Now, why my button's not working? Mouse, euro. There we go. Euro. Okay, so here's our euro. All right, these kind of work, which is nice. Why? Because they put the data fits in the chart. It's all equidistant. So, ta-da! All right. So this is how we're playing the euro. So the upper end here is 115. If we do get a spike, like I said, 115, 116, that would be it. For whatever reason, they scramble into the euro over Asia, and that for whatever reason they scramble into it. It spikes higher, then I expect it to go lower. And what's this, 103? Gazowie, move this thing out. All right. Does this do the trick here? All right. Okay. So can I undo my lines? Look at all that crap, Kev. Oh, yeah. All right. Auto arrange. Oh, you guys are, no, get rid of my frickin' lines. What, window, tools? Shit, make this stuff so easy and I can't figure it out. Whatever. Okay. All right. So I go back to my draw, my tool. Okay. So what do we got going on here? Okay. So here's our euro. We're just drawing in something, right? I'm trying to get as close to this as possible. This will work here. 109.59. We'll say 109. That's no 10. Yeah, 109. This is 110. Okay. Jesus, God. Do I have glasses? Cheaters? Hey, make your screen bigger, dude. Yeah. Yeah, I haven't figured that one out too. Do I want to make everything bigger? Because people watch this on their big screen TVs on YouTube. That's right. Don't forget to subscribe to Kevin Bence's YouTube channel. All right. So here's our euro. I guess, do I still have my little draw-in tool? Does this work out anywhere here? I guess we could kind of go that way. All right, and then this one is going this way on the outside. Now, why I went to the outside on here is basically this is kind of the last. This is kind of the last thing here. It held for these little wick things because it's a failure. Okay, but we closed halfway. Okay. The minor trend, what is this? A weekly minor trend is basically up for now. We have a large, right? This is euro and the dollar, right? So we basically have, okay, eyeball this one. That's kind of the trick there, right? Yeah. A little over the top of it. Okay. All right, so we basically have a channel in the euro, okay? So I'm gonna take a look at this pattern here, basically the same thing. A swing of the euro, okay, through the top up here. If this cracks, okay, what's that, 113? Okay, so if the euro cracks 113, what's this, 112.28, so that's 70. So that's a lot of room on the upside, that's 80 pips. Okay, that's gonna be a lot of movement, I think, for Asia to go upwards. But if it comes back through here, you need to have your alarm on here that it will at least come through and test this area. This was a failure. This was a failure to break out. We're coming down, so it's just a huge trend. Okay, I guess getting to the end of the deal. But how I'm playing this is yes, it is a base building thing, but I'm treating it as tried to break, failed, tried to break, failed. We held up halfway, so there's some underlying strength here. Okay, we did. If it hits here and comes down, hits here, everybody's pretty much going to assume that it's going to come down to here, and it didn't. It turned on it. So now you have people who kind of like maybe shorted here. They, comes back through, and now all of a sudden they're up to here. You're going to get a lot of short covering coming through, and it's not going to be, you're not going to need much to move it. All right. This is going to really suck, isn't it? Come on, you. And then I need to go to one more. Oh, no. I need to go to here. All right, so here's a daily. Holy shit, Kev, you got to get rid of these lines, motherfucker. What the hell do I need to do? Chart. Objects? Oh, yeah. Objects list. Delete all arrows. Fuck yeah. Okay, that didn't work. Try that again. Kevin. They are objects, right? Delete all selected. They're not all selected. Delete all arrows. You guys are killing me. All right, lines. Oops, lines. Those are lines. Yeah, that's what I did. Oh, you arrows. Whatever. All right, obviously I'm not playing with the right tools. Okay, so here we are. All right, this arrow will work perfectly here. Here's your alarm. Does it tell me where I'm at? Open, high, low, close. Nope, not close. Open. 111.5. Okay, so 111.5 is on your sell side here. We had, this is a pretty good reversal, but you can see here at 112, we'll say. So 112, 111.5, that's 50 points. 20 to 3/4, that's 50 points here too. Okay, cool. So 50 points and 50 points here. Okay. I would assume if it busts through here, it's going to take out this. It'll be just enough for the trend line. Oops, the trend line coming down for it to come through. It did jab, but here it's a little bit closer. If it comes through here, I'm going to assume that it would now come through the bottom and break through because it failed to make a higher high. So basically what I'm getting at is this is a decent close for the bears, but it's not anything overwhelming because it jabbed through, which was we could say that this is a short term. Where's my drawing tool? Where are we at? Yeah, that line that works there. That this, see how it went off of it? This used to be resistance on a daily, right? That used to be resistance. This used to be resistance. Okay, it blasted through. It came back down. You can see the wicks here but here's your line. Found support, held, found support, held, took off again. All right, but came back down. So we're back to the stair-stepping thing. You have this, you go up, you got another, you got another one, stair-step, and then this should be alarm here too, because we're back to this. Those were all open and closes, open and closes, open and closes, a happy place. All right, this though is a failure. This one moved a little bit higher, okay, than what would have been on the stair step and the down way. Okay, I suppose you could draw your frickin'. Everyone's going, dude, off the peyote. I'm in the Southwest. Some sort of medicinal deal like the peace pipe and stuff. Havasu is hoppy. No, Havasuvian. For I think it's blue-green, the color of the water. Yes. Okay, so if there's going to be a stopping point in the euro, this would be it. I'll shade under 112.80. Okay, 112.70, 112.80 would be your first stopping point. Here was the close. If they found some support, 111.60-ish area. Okay, so so you're stuck here. Okay, for me, how I'd kind of go at it, because of the euro is trying to enter your time zone, is that I personally wouldn't. I would lean more towards the long side for right now. Okay, for it, just because until this is lost. What time are we at? Take any shorts on here? Come on. Trade. Take any shorts yet? Trading. Sell stop. You don't take any orders yet. Okay. Because you do have, we'll say higher, low, kind of grunted up. What it is there's not much. It's one of these where they could swipe the bottom and swipe the top, or swipe the top and come through the bottom. Because the big picture that we saw once before was that the frickin' thing is just in a large sideways. Come on. Basically in a large sideways pattern. I think this is kind of like an ABC pattern, and then eventually it will grab my tool. Whoops, no. Why didn't you do my tool? Do I have to grab my own tool? I gotta grab my tool. All right, that. There. It's like an ABC pattern, and then this is this, and this is coming down. So that's what I think is going to happen. But what I'm getting at is that we're close enough, and you have to honor it for right now, that it made a lower low, it held the low up, and it's moving this way. It did have a decent reversal or decent pullback close for the bears, but it's on an inside deal right now. Okay. So it's kind of like, if it breaks out to the top, you go long. If it breaks out to the bottom, you go short, and you hold on for it to drop 600 to 800 pips. Okay, so basically, it's one of if you're going to follow one thing, here it is. I'm not a big fan of going on the long side. I'm just telling you that because of how close it is. You just swipe the stops and go the other way. Actually, I believe I looked at. Where am I at? I need to go to my commitment of traders report. Where am I at? I need commitment of traders. That's I. All right, so then I go up to here, new share, my desktop. No, not my desktop. This window. So my desktop looks like shit. Scheist. All right, if you guys could see this, this is the Scotia Bank sentiment report for Friday. Here's the link. Copy. Go into my doodle whacker. Go down to chat. Go into chat. Whoa, look out. Not the Mexican. Hey, man. What I'll do is I'll, don't be making me do some Mexican. Your election's going on. Trump fear. Holy shit. I think Trump is just, well, okay. I've been pretty close into a depression economically. But I think Trump, I've renamed the Patsy Plunge. If we ever wanted to take our empire, which history has shown lasts about, what was it, 150 to 400 years? Like the British Empire, the Russians kind of thing, maybe the Mongols. I don't know. We definitely know the Medicis only made it 90-something years. God bless them. All right. So the Trump, if we needed somebody, now remember, we have some pretty bright people who have a lot of old money and a lot of people who are captains of industry and blah. They're not playing this is Earth, we need to do hands across America. They're playing Stratego and Risk, and it's just to entertain them. Okay. Because when you don't have to worry about anything, you have to find something to entertain yourself. And there's, sadists and other people. The Dark Triad is a good one to go to. Dark Triad. Dark. Oh, okay, let's get back to this here. Okay, so we have, all right, so we have, what I was looking for here was, I wanted to see what the commitment of traders, all right, where we have sentiment, where are we at? Euro, the bias is bearish and the trend is increasing. So people are adding to their short bear position, which means that's probably why the price is going up. Their positions, does this mean they added 13,000 shorts? Their position is 13,000 net contracts and they added 1,600 short. So that's probably why they're getting slapped. Here's gold. They're bullish. It's increasing. They increased 5,000 contracts. They're a little on the long side, which means that gold is probably going to come down. Mexican. Okay, it's bearish, increasing, blah, blah, blah. So let's go and take a look at what I have here. That's yen, more yen. Here's euro. Okay, so what do we have? Above zero and below zero. Okay, so what we have... okay, long and short in the net. Okay, green are the number of longs, reds are the number of, and this is the net. Kept down here. Net, long, short. Okay, so this means that there are 100,000 contracts who are net short. Okay, so if it goes up, they're getting fisted. Okay, so what we're going to need to know, longs will need to see. Yeah, 100. Yeah, duh. Okay, 100,000 long, 200,000 short. So what we're going to see, we're going to probably see. Let's see, what did they do? Did they add? They actually added on the longs, but we're at that upper level. So the mono longs are pretty much loaded, and the shorts they didn't add. Did you add the price on here at all? No. All right. So 52-week range, long and short. Of the currencies. Okay, so euro, here's long, short, and okay, euro. Okay, so at one end they're short the euro, and at the other end they're long the yen. So basically, what you want to do is go long euro yen, go long pound yen. If these things unwind, okay, and here's your yen, your odd. So they're long odd. So odd will come down, but remember this is from Tuesday's data. It probably didn't include Mondays because of the holiday. But I haven't looked at any open interest to see how many contracts have come out. And then here's our euro. Okay, so here, euro net position. Remember, this is flipped. So they're short and the euro had moved up. Okay. So I assume if they unwind their short position, it's gonna get through 113. And as you can see from me remembering in the past, 6 months ago or whatever, 115, 116 is the upper end. So if I have multiple accounts that may have currencies in them that I don't touch, it's just a big plan. Oanda lets you open up a bunch of sub accounts under your master. So you go and throw X amount of dollars in an account. You put in the leverage 1 time, 10 times, 20, 30, 40, 50 times. And then you leave it. You know, like for the yen now, I might go and put a buy order in for say like 90, 92, 90, 88, that kind of, and say at 10 times gearing, because I have to mathematically figure out if I get filled on all of them, do I not choke it up at the bottom? Okay. So you have to do the math on that one when you put these things in. That's on the euro. Basically, yesterday I talked about I'd leave the euro alone because, like we saw, it's in a larger sideways channel. I play the euro that on the upper end, it's a hard stopping point would be 115, 116. A soft trigger would be 113 to get the ball rolling. Okay, again, to get all these shorts to cover. And on the downside, on the price here, again, you know, I said 111.50 or something, that the shorts begin to win out, and then the longs have to get out. So what you have is you have it pretty well split, that all of a sudden you break out to the upside on the third attempt, break out on the upside on the euro. All the shorts at 113 have to cover, and they scramble. This could be over Asia. Remember, Europe will be asleep. They'll do what I'm doing. They'll watch Kevy's little afternoon show and then go to bed, you know, and I leave it, and they come back after dinner, a lunch, which would be like 2 a.m. your time, I'm guessing, if I do the math right, 2 a.m. your time, and all of a sudden just freak out in Asia. They come back from lunch, freak out, and things go batshit. I've never seen guano, but that I'm aware of. It might have been in my tuna can, right? Okay, so salmon, herring, I don't know. Do bats fish? No. Okay. So dear Jeebs. All right. So what you do is we get enough volatility because things have narrowed, that we clean out both the shorts on the upper end. It goes into full reversal mode, and then go blasting through the bottom, 111, 109. Now we take out all the longs. And what happens there is you take out both sides. You've screwed both the longs and the shorts, okay? Or you screw the shorts here, and then you screw the longs on the way back down. That things begin to pause, kind of like after the euro, or after Brexit with the British pound. You cleaned out both sides pretty hard, and it's flopped around maybe a 600-point range, and now we're down to a 300-point range. So you clean them out. So everyone's going to have to reestablish positions once they say the dust settles. But money is always movement here. Like here, I like the pound because it's heavily short and the price is going the other way. All right. And then the yen, basically the same thing, where, here, let's go back to this here and look down here at the euro. Okay, net short, net short, net short. So they added in more. No, let's go back the other way. Mr. Kevin, the spreadsheet reader. Okay, 13,000, 10,000, 11,000, 13,000. So they're net record short again, like they were in August. Okay, long shorts, open interest, more open interest. What the hell am I missing here? So this is spreading. Okay, the open interest, right? 366, 375. There's more. The net's the same. The shorts are less, and the longs are less. So we have spreading going on here, rolling, or the swap guys and all that other fun stuff. I'm not gonna look at that now here. Okay, so here's your Aussie dollar. It looks to wane. Looks to be they're gonna have to roll this thing over. New Zealand dollar, I'll kick the crap out of. All right, and then the S&Ps, they look. These guys, they got long and okay. They were short from. They were short from China deval. They kind of covered their shorts going into the Santa Claus rally. Then we had the rate hike and it came back down. Then they went screaming the other way, and now we get fried. So you take a look at this. What is this, March? They show it down here? You give me the little box like the other ones? Hell no. Okay. So what you have is you have a 50-point drop on here on the S&P, or actually more. We're down to here, right? The hell, S&Ps, minis, those minis, right? Didn't we close at 2114 or something? So we're the hell down here. Okay. All right, so we're down to here. We're gonna have to, but oh yeah, that's right. Okay. This stuff is gonna unwind. So we're gonna see a big, like in the December, it came out of the December. Where's March? Okay, March. Oh, that's right. They ran into it then on the rollover. We talked about that in Saturday's video. Okay. All right, so it's rolled over. We're down to here. A lot of this open interest is going to come out because of the rolling of the contract. So we have to reestablish positions. So do we reestablish shorts going into expiration of December, or do we get long? Do we say, look at this, go, this is a one-day deal, hallelujah, now we can buy for Santa Claus? Okay. I'm looking for after that. I think that there's going to be enough. Oh, crap, the birds are out and I didn't feed them, or the rabbit. All right, I better go to the Mexican here. All right, so Mexican, I believe the Mexican's on here. We'll look at that. I play the Mexican just due to the fact of the interest rates that's offered out there. Is that my Mexican, or is that my crude? Oh, here's my Mexican. Okay. Mexicans, net short. They're short. I hear they're short, but it's going the other way. Okay, price is going the other way. So what I like is where are we at, 18? I would go short Mexico dollar. Okay. So I'm looking for it to go to 15 and not 21. Okay. That's how I earn my interest on that pair. Do I have access to the Mexican yen? I don't. Mexican yen would be one to look at. Not on this broker. Okay, that's right. Multiple brokers, multiple continents, multiple. Yes, if one goes bust with your cash, it may take a little bit of time here. I had one take 22 days to get the cash out. That we both know the trade never left the back office, and it wasn't a lot of money, but it was a very, very large retail brokerage firm, and that got, because they also absorbed Knight, I believe. So there's a nasty book of losses that haven't surfaced yet. That I'm just guessing is still resting there. Okay, so out of that, so we got to go to, what did I say? Okay, so let me go back to all the charts. So we got the euro. Okay, so the euro we're seeing, if I can remember everything, whatever. Possibly wipe out both sides. Okay. Aussie dollar, they're going to have to sell off more, fade any rally there. Okay, here's the euro, whatever. If the euro goes up, this is going to go up. If this is going to move, I think the head and shoulders is what, 400 or 500 pips we said? What is that, 44 to 40, 400 pips? So the risk is anywhere from 53 to 55, somewhere in that area. If they just go scrambling up here, okay. Euro odd on this one. Hourly, anything, so any of this stuff look. All right, let me move it back. No, that doesn't help with the ADX. I was trying to see, here's the ADX swinging one more time up in here. for the trend. The downside here would probably be here's a 148, depending upon where you're at, 148.13, 148.20 we'll say, and then 147.20 is covering points. What's this one? 47. Yeah, just to cut, because the deal is that if this thing keeps rocking, you know, it failed to make a new low. It's now blasting through the upper end. We see that that we're long euro shorts, and so they got pinched on Friday. So we need to figure out how many of those got out on Friday. What am I doing here? Euro versus the dollar, right? 9. What am I doing? Oh, it did come down. Yeah, I know it did come down. Why the hell is this making all this? Yeah, right? 9. Yeah, so this is Friday and came down from 113 to 112. So lost 100. Okay, the chart's a little deceiving. Yeah, here's our party. Came down. Bounced, did the 50% thing. So yeah, so we probably cleaned out some shorts. So there might not be as many shorts to get this thing over 112.60. Okay, for now. 112.60, 112.8. Yeah. So, okay, so right now you could say 113 at the high end. You want to add to the short if it goes below 112, and the first stopping is 112.50. Depending upon how small you play, 1 minute time frame, 5 minute time. I'm not sure. I kind of look at it as this time frame. Once it breaks the trend line on the monthly, it's just down. And here to me is a sideways 4 pattern, and it has one more leg down till we will hear par with the US dollar before between 2018 and 2020. There we go. We'll hear par. Because if it continue to jack up interest rates in America, it'll cause the currency to rise. Yeah, so here's just a big daily picture going back 3-4 years. As you can see, it's a huge triangle pattern of the euro and the Aussie. It'll only go up if the Aussie goes up, right? Yes. And we'll not only, but you know, if the Aussie goes up, it goes up. If the euro goes up, it goes up. Speaking of the dollar, how I look at it with the Aussie US dollar. That's the pair that's thrown at me. I prefer them to go either way. Just take your spread out and just let me, you know. It's kind of like fighting, you know, because they jam everybody into a pair. You know, things will change when you have a prime brokerage. You know, so you know, to me, I'm not taking this as a head and shoulders because it would have to be more up at. Here's one here, way over. Here's a head and shoulders. That's what I'll take as a head and shoulders on a monthly. Okay, that's multiple months. What's that? A year, even maybe? Multiple months, quarters, multiple quarters. Then you have a big ass triangle here. Well, this is your support. Anything cracks under here, you watch this 200 points lower. If it cracks down here, then you have it. Actually, you can trail one under here. You guys take it yet? Trading, sell, 146. Doesn't take it. But 146, can I set an alarm? Whatever. You'll remember. Okay, so I have to figure out what time they start taking orders. All right, so then let me see if I have it in here. US Mexican. US Mexican, what do you know? Ta-da, US Mexican. Okay, so we move it all the way out to the monthly. There's that. That looks like crud. Here's a weekly. How do I change this to this? Come on, go to this. Go to that. Oh, maybe it's because I'm still jammed in there. I'm jammed in there, Kev. All right, jammed. All right. Oops, back to here. There you go. All right, so here's the Mexican. So the Mexican here. All right. The angle of ascent is increasing. This could be constituted as a pause before cracking higher, which would go along with a stronger dollar. But if you have people piled into this, it wouldn't take much to get it to go the other way. So if I had my little brokerage guy on, 118.52 will get my attention. And I set an alarm. What's this one? What do we got here? One click trading, time frames refresh, out of range. Oops, here you go. Yeah, so at that level, you want to sell. And hold it. Is this thing's actually showing up in my deal? Are they not even hitting? Where we have activity? No, it doesn't. I mean, they're not even accepting it to put it in as a market is closed order. Oh, I may have those on too. That they don't offer me trades until the quiet period is done over the weekend. But that's why I like Orlando in the first place, because they opened up hours. They had an office in Australia, and they opened up hours before New York did. So somewhere around like 10 minutes after noon, you know, less than 7 a.m., 6, 7 a.m. your time, a.m. The markets were open. Ding, you know, it's Sunday morning in Britain, and I'm trading in New Zealand. Take that. Little wider spreads, but what was the one? Oh, Mexican one. Here's the Mexican. Oh, let me take a look here. Got questions? Got answers? Where's my chat? All right. From 20 minutes. ANZ. Oh, sun's. Oh! Did I switch that? Oh, man. New share. Yeah, I shared the wrong thing. Sorry, man. Rock and roll. Oh, that kind of sucked. All right, going back. Rock and roll. All right. Well, I have to remember to do that. It doesn't automatically go to the screen in the front. Oh, yeah. No, it's okay. ANZ. All right. So you got the Australian one, blah, 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 blah. Yeah, you already know. Any bounce in the Australian dollar, short it. Any upwardness in the euro greater than Friday's action would be the last of the shorts covering, because you're now going to have the bulls who are like, oh, got to 113, and then all of a sudden we're at 112. You know, so we may, depending upon the open interest, we may have had the shorts cover and the bulls get out. So there's less bodies in there. Dark triad. Look that up. That's Donald Trump, the dark triad. Okay. Euro odd. I love that. Euro odd busting out. Blah, 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 blah. All right. So the Mexican. Okay. Here's the Mexican story for you. Okay. So it's Sunday night, and it's, God, what, 5 years ago? H1N1, 09 maybe? Jesus Christ. H1N1, right? And so Sunday night, and I hear it, boom, I have an opportunity at Dollar Mexico. Gosh, did they put that on here? I don't think it goes back as far. Ooh, H1N1. So wherever it was it this guy? Okay. $19 calamite. What the hell is calamite? What's that? Calamite. Great, now I got to look this up. Thanks, man. Calamite. Ooh, bugger. Hold it. Oh, yeah. You're sweet, Swiss, right? Swiss? Oh, dude. Hey, is your microphone on? Hold on. Unmute all. Unmute all. All participants are muted. English. Es ist nicht so gut, ja? Sprechen Sie Deutsch? Oh, Kevin. It was early 80s. Your English is bad. Okay. Oh, that's why charts work out so swell. Okay. And I should slow it down. Okay. So here we have the Mexican. Okay, where's my pointer? And then I'm going to take a break here and get some tea and stuff. Okay, so here's the Mexican. My Italian? Oh, better Italian. Oh, you're a Southern. Are you a Southern Swiss then? Oh, I need to learn Italian then. Find a thing and watch. Well, see, I can watch television. I watch the telly. And then I can switch it over to maybe Italian and listen as they write the words on the screen, and that would help out. I guess I should, right? International guy. All right, so here's the Mexican peso, right? Okay, I like the short side. Okay. If it comes through here, then I expect it to fall all the way. I was looking for 15, I think it said. 15 and change. I think right about here. Well, let's see here. I like... well, this is all the way back to here. So 1460. Okay. Okay. Okay, that's where I want it to come down. All right, so that's that. All right. Probably at the break because of it. Remember, it's dollar related, so the dollar. My charts from stock charts were down this morning, and I don't think these guys give me a dollar chart. Did I post one yesterday? Okay. Okay, so this is a monthly. Okay, so walking this thing out. I actually shorted a bunch of times in the 90. I would, whoops, I would short it. Okay. Anything under that, I would short because this is a little too close for me. I shorted up. Actually, I've shorted a few times here. Okay. So go to daily. Come on. Oh, I need my pointer back. Okay, I've played this thing a few times. Did I play out the breakout? I can't recall offhand. Yes, I did. This is June. Okay, so I played. I think this one here is where I got in first time on the short side, came down, got out, came out, did it again. I think I missed this one. If I remember correctly, I missed this one. Then I ended up playing it long down here. And then now I'd be interested in shorting it. So what you can do is actually run. I better go back to here. That does look kind of weak, doesn't it? I actually, since I've shorted so many times in 88, in the 80 levels, in this 80s, that's what I remember. If it gets over 90, I begin to short it. So like I shorted it here in the 90s, and here, but here I have the same powerful thing like you do. So basically, it's the same thing. Now, look, if you're playing that Mexican peso, I'm not sure of what your finances are and stuff, and also with the other one. If you're trying to make a lot short, I'm not saying I'm not being critical of your trading, but usually, like when I deal with people one-on-one per se, when they come to me and say, "Hey, I've pissed away $100,000. What do I do?" And I work with them one-on-one to get them straightened out, because basically it's between their ears. It's not that I'm teaching them math. It's that I have to apply psychology pricing on their brain. You just have to flip your thinking. It may be innate that's all they do. It's kind of like betting on a football team. Some people just naturally take the underdogs. Some people naturally take the long shots. I have difficulty at the ponies with the track, with the horse, betting on horses, laying $2 to win 20 cents. Because to me, as a risk manager, because all I'm doing is managing risk. How much, if I get into a position, how much am I going to lose is how I look at it. I start with, is it too far away? Is it too giddy? That kind of thing. So for me, you're gonna see me start coming in again, up into this area. But when we looked at the big picture, remember, this thing's on a tear. Okay, and at the end, it does have a couple upper wicks here, but at the end, it can get kind of goofy. So if you want it to go you want to short this thing in 1819, you're gonna, it's going to get kind of painful. So as I break this down, 1 hour, 1883, I'll probably set an alarm. Where am I at? Where am I at? Well, see, the nice thing I can do is with a Wanda, if I just want to throw, instead of throwing, throw, 10,000 at it, short 10,000, I could short 1,000 at it or whatever, throw 500 euros at it. That, remember the leverage for us, our leverage is maximum at 50 times. So if you want to throw 100 euros at it, whatever, or 100 pounds or 100 Swissy, whatever, that kind of thing. So 83 is probably where I'd have it to short it and then just let it ride. Okay, what's this? 1, 2, 3, 4, 5. Yeah, 83. This will be a good one. Thanks, man. All right, and we're coming up here in the half an hour. Do you have one more you want to look at, dude? Before I go, because I have to get some tea in here. My throat it's been 90 minutes of nonstop Kevin. And I have to do 4 hours tonight. Oh, perfect. Okay, let's do it. What's that one, a 1 hour? Okay, let's go back to this guy. Whoops, I need my pointer again. Euro. What was the other one? All right, so go back to an hourly. Oh, let's just march it down. 4 hour, 1 hour. Did I do this before? Delete all arrows. Yeah. This for me, just because of how you have the euro can actually break on both sides. The euro can break. They can go to. This is what. Okay, if in the ideal world, is they'd break through. All right, where's my? Okay, in my ideal world, they'd break up into here. Actually, they don't have to get much, but we'll just say they basically they get over the top of this one. They break through here, and then they come through all the way down. So that's how, in my ideal world, is we'd break up, we'd move, we'd get to it. What's this here? 114, 115. There's my 116 one. Yeah, once all I have to do is here actually get through there. Erase. Cool. Ow! That's even cooler. Yeah. Yeah. So that's how I'd look at it. That's how I'd treat it. Con short. Well, my problem is let's take a look here. Oops, I need my pointer. Go to con. What do I have for? There's that. All right, my server doesn't work. Let's see here, FinViz. The place I get my charts from, they're not there. Okay, con. Well, here, hold on. Okay, new share. Con. Oh, that's okay. No, it's not my fault. So now you should see the con chart. To me, it just looks like it's breaking up. The con on here to the upside. What do I have? I also have. Does this one work? What's this one? Oh, that didn't work with the shit. What about you? Okay, you worked. All right, so you should see a new window now of Safari is open. This one says Disney Con. Okay, Con. This is basically it's a. All right, and I go to my writing tool. I draw. Ooh, that's a good one. Well, I like these. All right, the unbalanced volume is up and the money flow is up, but you saw a little bit of a hook on here. It may come down to this area because there's a lot of people in it, but it had a pretty good move off the bottom. You could see the amount of flow on here. Here's an area. Where is this here? Does this work? Okay, this will be supply. I guess the whole thing. There's overhead supply on here. And then this would be another stopping point. But here's the deal. I mean, if we trade lower on the futures and then turn around and go higher to catch the shorts, like say Britain, okay, we closed down in Europe, or we closed down in Asia. Then we open up Europe at the lows, and they only have to go for a few hours on the downside, and then we feed it to the Americans in turn. As prices go higher, it's going to be met with cash sellers. God, that's actually a good picture. Save. Boom. That's cool. Okay. All right. So those are levels on con. Okay. The amount of people got into. I'm not, like I said. Now remember, I just do the stocks things just to keep my mastery sharp. I prefer currencies, and I really produce futures. One, they cycle every 4 years. Every 4 years, I can make 900%. Two, well, per commodity, because some years all of a sudden it'll be corn, wheat, and corn, beans, and well, I can go to that real quick here too. Go to my mouse. Where do I have it? Go to here. Clear all my lines. Go down to charts. Where the hell are my charts? One more. More? Any more? Commodity quotes. Free charts. Go to charts. Goldman Sachs? No. Go to commodity charts. I want to find me some. We'll just download all of this for now. Kev says, copy. Go over. Paste. There you go. Now you got it. Meat. All right. So commodity chart. So now I'm going to be looking for my soybeans, which are down here. Okay, soybean meal. Now we'll start off here. You can take a look at it. All right, soybean meal. All right, as you can see, a swing, a swing, a swing, a swing, a swing, a little swing, a swing, big swing, big swing, big swing. This was due to the fact that the dollar went to 74. Two, it was a secular bull commodity cycle. During the 70s, the 80 was another commodity secular cycle. But what the underlying theme is with these spikes are El Nino and La Nina. This is growing patterns of moisture in the United States. Okay. So what I want to show here is 4 years, 4 years, 4 years, 4 years, little bits, whatever, 4 years, 4 years. 4 years, 4 years, 4 years. So that's the story. That's the fact, Jack. I expect commodities to come down with the stronger dollar. Soybean oil, a little bit different because it has both palm oil and canola in Canada. And what else do we have? Corn oil, but it's mostly vegetable oil, with is basically soybean oil. So the same deal here. Okay, drought, that kind of thing. All right, now look at this. The prices on the soybean oil came back to the highs of even in the 70s. So you take some inflation, it's still on, these aren't adjusted for inflation. Here's corn. Corn bounced off this level here, but I think it's by 2007, I think it'll be back to $2.50, $2.50. Wheat, this is why I started in with the wheat. Now they're selling it off. It's dropping. This is like an accumulation thing. Every dollar is $5,000, maybe $1,000 margin, $2,000. So it's like 250%, 250%, 250%. Then, I'll take it. But the thing is on the pullback, buy the dips, you add more. They have mini contracts too, besides the big ones. These are 5,000 bushels, so it's $50 a penny. The smaller ones, I think, are $10 a bushel. And then here's wheat again, Kansas City. And then here's Minneapolis. And you're saying to yourself, Kev, what is this? This is what happens when you don't put any stops on and it doesn't work for you. You're in trouble. And that's what happened to this person. They got into trouble. They ended up paying top tick, obviously. Here's oats, same kind of thing. Oats a little more sensitive to the weather. Minnesota, the Mall of America, where I'm from, we're the #1 producer in oats. Okay, so when I get in the car and drive around, I can see what's happening here, and it gives me a rough idea. But oats have come back in. So the deal is I'm going to spend the next 2 years beginning to accumulate positions in these. I make like oats, maybe $1,000 or something for margin. It's thin, but the deal is if oats are down hard on a day or something, I put in a buy order. Buy one contract, just sock it away. Don't look at it for a while. Yeah, big trouble, no shit. Go for $4.25. That was, and I got a story. This is the first exchange I worked at. This on the floor. I was 19. I was in 1987. So it was the year before the big drought, which was in 88. Where are we here? Woo, big drought. But if you go back up to soybeans, that's where it was. Where's my beans? Because in 1988, soybeans. So 1988. So this is 1988 here. Okay. I came in 1997, down here, 1987. Okay. My focus at the time was that the stock market was going to crash. I'm 19 years old. I just got done working at E.F. Hutton through high school. They were charging $150 a side to trade. So if you wanted to buy soybeans and sell soybeans, the commission was $300. And now you can click it for about $2.50 or so. I went to the floor because I could get commissions for about $3.50. So I shaved off like 99.97% of my cost to trade. But at the time, I was looking at the stock market to crash. You have a 19-year-old kid. It's April of 87. I'm in everybody's face. I said, this thing's going to crash. I ended up selling my life insurance in July. And the rest is history. Per se. All right. So 87 rolls around. So now I'm on the floor. Okay. But then we had it was god awful drought. I mean, it was the grass was all. I mean, it was that kind of land of 10,000 lakes and everything is brown. All right, so we come back through here. Then in 1990, okay, then I left the floor and I became a branch manager of a brokerage firm at 23 or something. Okay, and that was the first Gulf War, and I watched that play out. And then the stock market got better again. And our commissions then went from $150 to $60 to $35, and then it was $17.50. So if you're have a Ferrari payment at $150 commissions, and now it's $15, you have to work 10 times harder commission wise. It's too much. So that you had to restructure your business model, and it came out to be an independent trader. But I prefer the analyst side. I can get you to like I said, I can get you to the fishing hole, but it's your job to do the fishing. You got, hey, there are better fishermen out there for me. It's just like that basketball player that wanted to play baseball or play football, or the many baseball players or the football players that wanted to play baseball, that kind of thing. You know, they're good in one, but bad in the other. So if tick for tick, I'm a better analyst than I am a trader. But what my shortcomings, I realize that, and what I do is hire people who have no clue about the market and say, look, this is the trade. You buy it here and you sell it here. And they just sit around and let it do its thing. And then I just ignore it, because that's the whole plan. Like today, that's what I'll do with you with that Euro Aussie. We'll start off with that because the currency's open before the futures. So hopefully, you know, I have server problem from one website to get my charts. So you might end up with 2 hours of nonstop futures trading, you know, click, 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 or FOREX trading, click, you know, between 2 and 3:30 and 2 and 4, or the first couple hours. What time is that going to be for you? So if it's 2 o'clock, oh my God, it's 9 o'clock at night. Oh, dude, is that 9 o'clock? No, okay, I know this. It's 6:40 my time. So if I'm right, is it, no, 7 hours, right? 6:40? What's 7 hours? 1:40? No, you're a couple more hours. So is it 3:40? You're 9 hours? You minus 9? The hell time? What time is it? Wie viel Uhr ist es bitte? So 3:40. Okay. And I'm at 6:40. Jesus. Okay, hold on. I'm on 06. 15 divided, yeah, so you're minus 9. Okay, so I get up at midnight, so it's 9 a.m. So I'm up at 9 a.m. your time. So that's what time I get up, right? Yeah, if I get up midnight my time, it's going to be 9 a.m. your time. Oh, beautiful. Yeah, right. Yeah, right. Yeah. Well, unfortunately, I'm going to send you an invoice. No. You'll figure it out for yourself here. But cool. All right, I'm going to let you go because I'm going to save the throat. But I believe we hit everything. Oh, is Mexican in here? I don't think the Mexican peso's in here. Lumber, cotton. Oh, here, you're going to love this one. Here's cotton real quick. I'll leave you on a funny note here. Cotton. Let's type this in. We can play. Oh, text. What am I missing? I type text. Do I type in somewhere? Well, where the hell is it? If I type, I have text. So what do I have to do for the text part? Do I draw a box? Oh man, I don't know what I'm doing now. Text. Here's a draw. Draw this. Draw it. It works. Now go to text. Beep, 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 beep. Why do you not do that? All right. Well, that's the first time I tried text. Do I text it in a box? Jeez. All right. Okay, we can play this game. This here was actually a brokerage company who was either British and now Swiss. Oh, they recently went public, I think. I think they went private and then public. It begins with the letter G. A, B, C, D, E, F, G. G. Begins with G. Can you guess this company? This company's broker, money manager, hedger guy. I think somewhere at either this point or this point, they told us he was short about $2 billion in Glencore. This is how Glencore went belly up. Their little trader buddy, just like our Barings Bank, all the little rogue traders. This guy didn't get out of his short cotton, and they wrote him all the way up. And as you can see, this goes back to this is the highest on record. The previous high back here at $1, it wasn't, the last time cotton was at $1 was during the Civil War. And we in America put up a blockade in the Mississippi River, and the British tried to get through to buy the cotton. And so the British went on the Confederate side. Well, of course, that's the wrong side when you're the Union. So it's basically the British were trying to support, like we'll say, Ottawa. Oh, Kevin, classic. All right, so, but it was New Orleans, and all of a sudden there was a shortage of cotton. The cotton exchange went bonkers. The British industry went bonkers even worse because they were the large textile. And Britain fell all to hell because in 1871, the United States took over. And we have been basically nonstop since. We were a powerhouse of like 1/3 of the world's GDP, but we're down to about 19-20%. And that's just because of we're on the big picture side of stuff. We're on the thinking side of it, not the making side of it. For commerce, and that ours is like software, stuff that doesn't exist. You make one piece of software, everybody. Just ask IBM. So this is Glencore. They got caught in this up, lost billions of dollars. And of course it comes down after they run out of that. They tried to get their crap together. Cotton, though, here's 60 cents, either side of it. You play short if it goes below it, and you play long above it. I'm going to assume that a lot of these traders or hedge funds are going to start piling into a lot of these different commodities, just rotate from one. So here's your commodity deal. We can just say we're back to this level here. I'm going to assume we're going to come back into this. This cycle here is probably gone forever. We probably will never go over this again for 100 years plus. This is all Russia and Saudi Arabia and Canada and everyone. That was the last of their hurrah. If they hedged, they're good going. I can't see oil up on the upper end 60, 70, and on the down end basically 30, 40. And that's just due to inflation for right now. Cotton is a good chance to go back up and over again. It looks good here, what's this, 80 cents, if you can hold, this is what, $10,000 here. So that's, but you might not get too much. Like I said, it took 100 years for the dollar to get cracked. And here it took 14 years. Or where were we at? 17 years? It took a while. What is that? 95, 15 years or so. Yeah, 15 years. That took 15 years. So even though it's, it got you this and it got you this. So that's cotton. Take a picture of it. But I still haven't figured out Glencoe yet. Can I type? Type? What do I type into? I guess I don't type into Squanch. All right, go up to the next one. I have to figure out why the typer doesn't work. Clear. Lumber, big sideways pattern. I like lumber just due to the housing. Cocoa, I talked about it yesterday. Down. Yeah, that's good enough. The numbers are different, but, coffee, I like. But coffee's a killer. You got to be very careful on coffee. It'll mess up your afternoon. Yeah, there were some pretty nice swings in here. This is basically productive, but if it, this basically is looking like, another, you have one of those where it can come down this way. What happens if we go into a recession now? 70 to 50 cents. But if it does the thing like the euro, maybe it'll 160. I'm just splitting hairs here. So before you start looking at all up in here, don't forget about that one. Even if it's an ABC bounce 50%. Take a picture of that one. Clear. All right, come out on my button. Sugar. All right, Sugar looks to be a decent guy here. And there's that. But here you have this. But here's a party. Here's a party. Here's a party. This was when they had all commodities. So we might, you have to be careful. Let's draw something through there. You have to be careful. This is one of those where on a pullback or something, maybe I'd buy an option or something, that kind of deal, or buy some bull spreads. I haven't looked at the spreads. The deal with sugar is that my birthday's in October, and it's one of the few V contracts, like gold, that kind of thing. Few cattle, that kind of deal, whatever, livestocks. So I like to watch it during that time period. But it's one of these things that, it's easily cornered and you can have it on the cash side. Cargill and the Brazilian firm, they merged their trading desks. And so we can have like an oligopoly thing going on here in sugar. America still gives old families price supports and stuff. To me, just let it ride. I understand it. It doesn't, compared to how much we spend on defense. It's just part of the game. Take a picture of that one and clear all my stuff. Get my pointer back. Orange juice. Orange juice looks like it's getting a little toppy here, but watch out for one last swing for into the late winter. Canola looks like it's stalled, sideways to down. Rough rice, sideways. Be careful of this one here because it could poke through here and then take off. But this looks like it broke. It's, basically kind of sideways to down. 3/4 of the planet eats rice every day. Oats, see the oats thing again. This is catching my 50 cents I can handle as a loss. That's the whole thing too, is the full value of the contract is $7,500. So you throw 10 grand on it, that's more than what it's worth. So it gives you some protection, whatever. A lot. That's people get blown out of the water. There's our party with Glencore again. Sugar, coffee, cotton. Those options are expensive, though. I mean, it'll be like cotton will be $1,500, and you have to be quick about it too. Some of those are like lottery tickets. You buy it, close your eyes, and hold on tight. Wheat again, corn. Corn bouncing off of here, $3. Bean oil. We're getting some seasonal stuff here where they lift the hedges. They've been hedging all year long. Now the crops are coming in. So they deliver the crops and then lift the hedges because they're short. Okay. Soybean meal, big old reversal here. Soybeans, the reversal thing here. I think beans are coming down to $6. So if you short beans at 10 and buy it at 6, that's 20 grand. And okay, how about this one? There's $4 to downside and $2 to upside. So it's, you throw 10 grand at it, you can make 20 grand. And I'd have to say by next summer. I should look into that one too. Run some sort of plan. Milk. Reversal here in hogs. Hogs were we're back into this level again. You know, things are a little more efficient. Here's feeder cattle. Cows should come down. I'm going to say that maybe we'll get a mad cow disease or something to mark the bottom. Cattle prices are falling. That's because of the dollar. It's foreigners. It's getting getting competition now from pork and chicken's cheap. You know, so beef was worth more in America than gasoline. You know, by weight volume kind of thing. You know, you want a gallon of gas or pound of beef, that kind of thing. Natural gas, I'm bullish on it. I think it's a matter of time before it takes off. I have it only going up into this area for now. 3.5 to 4, 3 to 4, 320 to 4 through October. Gasoline basically sideways to down. Same thing here, sideways to down. I think that's diesel. This is gasoline, basically sideways to down. Brent crude, possibility of going up to $50 and up some, but no more than 60, and then no more than, what's that say, 30 something on the downside. Kind of like this period all again. Here's the Gulf War, and here's Brent oil. Same principle. Came into this area, same thing, found some support, maybe a swing up for whatever reason, but then back down. You know, 30 to 50 range instead of 40 to 60 range for right now. 40, you know, play it by ranges. You know, play it, you know, above this line buy, down, you know, below the line sell. You know, here you are, above this line buy, you know, buy, you know, buy. Comes down. Well, sell, got stopped out when it came back through the line. You know, buy, up, came back through the line, sell, is whipsawed, and then sell, you know, sell. You're going to sell again, didn't make it, come back, get stopped out, you know, that kind of deal. You're just basically pushing your hand. Same thing with crude. A range of 30 to 50 after it's done doing 40 to 60 is how I'd look at it. Dollar index looks like a bull flag. Here, I'll draw this up. Bull flag. And then probably up to about here. All right, so this is a bull flag in my eyes here. You know, this is the bottom. So this is like 5 of 5. This is kind of like your, what are we at? 1, 2, 3, 4. So this would be like a 5 wave up to here. What did I say? 103, 104. 103, 104 is then after it cracks through here is the next pausing area. And what will happen there is that'll probably be like the 3rd or 4th time that they raise interest rates kind of thing. It'll be a shock to the system, but we'll realize that we got through it and then move forward. Oh, whoops, I need to go back. Come on, you. Oh, you piece of cheese, where are you? Forgot to take a picture. Yeah, we'll take a picture. And then, let's see here. Oh, yeah, you still haven't changed this one yet, you banana heads. Here's their Mexican peso. I emailed them once before. Clear. Looks like I have to clear all drawings. How do I do this so they know that they've screwed up? Take a picture. Send it to them. Peso still sideways. I think it's a peso. No, what is this? Dollar index. Even though they write peso on there. Aussie dollar, is that right? Yeah, okay. Aussie dollar. Same thing. Here's big picture, right? Stuck right here at 75. You know, above the line buy, below the line sell. I had a friend that I told her to go. She was accepted to the University of Sydney as a doctor, and you know, she wanted to go to Mayo's or Cornell or whatever. So I told her, I go, look, you can go to medical school for half the cost. And she did. She went to the University of Sydney for what, 4 years? So she was somewhere in here. So she went for it. She switched all her money into Aussie too. Oh my God. Did I should go ask her for a fee. Well, what happened was, of course, she gets out, you know, after 4 years, she, you know, gets established, gets a home, gets a job, and the economy craters. And so, of course, then it's labor, so they got to get rid of bodies. You know, people are still sick, but you don't need as many people. Or in hospitals in America, they're down to on call. So if you need an X-ray technician, it may be 2 or 3 hours before they show up. All right, so we fly where I'm at, 50,000 people in town. They all take helicopters to Las Vegas, you know, 25,000 a pop, because we don't have people here at our hospital. But that's what you do, get rid of labor. So she ended up with now 2 homes, 2 hours apart, on a brand new doctor's salary. So, but we're back to that one. So that one worked out. I actually literally helped somebody get a medical degree for half the cost. And where are we here? Canadian dollar. If the Canadian dollar goes higher, so should oil. Like Saturday's video, America gets a third of its oil from Canada, another third from non-OPEC, and 1/3 from OPEC. So that's Canada. British pound. I don't think we're going to go back to this. I don't think we're going to go back here. It would be interesting though, because this is actually a swing off of higher interest rates. But I'm guessing that we're gonna go back up into the 150, 155 area. That's what I'm looking for. Because you've taken out a lot of years. You can talk this up, but I don't think it's gonna happen. Japanese yen, same type of deal. This was the same. I'm taking this as the same type of deal. Basically get a bounce off of it, bounce, and then it comes back down. So this would be like 130 on the yen. This would be 70 or something on the yen. This looks like a sideways action. We've seen a bunch of this today. We're going to be talking par here. Swiss franc, this thing can just go to freaking 35. Go, just this will live forever, but the Swiss franc just 80 on here from where we're at 100. Swiss franc to lose 20%. That's how I'm playing it. Copper, same thing, probably back into this area. 150, under 2, then it's 150 area. Palladium back down to here, 400 or less. Platinum, the same thing. Once it goes through here, back down to $400 from 1,200. Upper end at 14. It's one of those $200 up, or 2, 4, 6, 8, or $1,000 down. Same thing here. $50 to $100 up, or $600 down. Okay, platinum. Silver, same thing. $5 up. $5, $10, $12 down. Silver. This is between now and 2020. Gold, same thing. I was only looking for 1,400. I think that we have this, and we have the high, and the high, and we have the low, and the low, and we have this, and we have this. So we have that. But I'll be more than happy to take gold at 400, 500. What is that? About 7, 6, right about there. That's what I'm looking for right now. Gold, we'll just say that the I'll say it goes at most 1400. Anything for right now. We could say if oil goes over 49, then I think it'll go to 53, 54 for oil, West Texas, and then interest rates will rise, but that'll cause the cost to carry. And then I think gold goes from here, which is like similar to this, same type of deal. Kind of deal. This was going into 1987, just a bounce, and then that would be somewhere in here, and then euro dollars. Euro dollars are going to come down. This is 2%, 4%. 6%. I think we're going to go to 6%. Is what I'm aiming for. $97. All right. Watch out for shorting euro dollars. This is an expensive contract. Margin is thin, but it's expensive. Millions of euros for pennies on the dollar. So be very careful. Take a picture. Clear off my lines. Take my pointer. Roll with it, baby. And over some more time to here. 2020, I'm guessing. Maybe 2018, 2019, 2020. That's a pretty big move in interest rates. And I guess I could kind of do this. That kind of thing. Take a picture. Kaplawi. Clear. Mouse. Same thing on the 10-year. Back to 100. 30-year, even worse. Draw your trend line on there. That one, just look at that one. And your volatility. And here's the Aussie index. Gosh, look at that. That's a long ass bull market. You can see how commodities, how far they came off. This is bad. This is bad. So this guy is going to drop to somewhere between 3,500, we'll say. I'm just trying to pick round numbers. 3,500 and 28, which would be about right. That's 50%. Okay, so this one's going to fall 50% from whatever, we'll say 55 to 28. That's what we're looking for. Pointer. Russell 2000. There's a bad moon on the rise. Oh, you know what? I need to save some of this stuff for today, yo. So I'm going to fly. All of these I got to, if I do all this now, I'm not going to have anything later. There's the DAX. There's the Nikkei. There's the utilities. Good Lord. Look at them fall. Transportations, DIA, Holy Bucket. Look at how fast I'm moving. I'm just having so much fun. Yeah, we'll leave it on the utilities. Whoopsie. I should just draw a line like right now just for shits and giggles. Just draw it and go. Yeah. Yeah, that'll work. There's 145. So that's going to cut a third off of it. Take a picture. All right, you. I'm going to, yeah. I'm going to take off and save this, and I'm going to let you go. And then okay, so 9 hours difference. So 2 o'clock my time, and 2 hours is 7 hours. So, no, that's not right. 2 o'clock. 2 o'clock my time. Oh, man, hold on a second. 2 is 7 is 9 o'clock at night your time. Well, hey, you got this one in, so don't yourself. And it'll be, the other one will be saved. I'll save it. And then Friday morning or Monday morning, I'm starting a deal where people can watch the previous day's 2 hours in the morning for those who can't watch it for $5. So kind of like just a deal to get people going, because I didn't realize when I was doing these Sunday shows the time difference, because I have people in Europe, and all of a sudden when I was doing these shows in the evening, it was midnight. Some of these people were literally coming out at midnight, and it didn't dawn. They didn't say anything. It didn't dawn on me either, because I'm on the West Coast time, because I'd reverted back to what I was here. So now, of course, I'm doing it at 4 in the morning, my time, which is whatever, 9 hours difference. Yeah, 4 in the morning, 9 hours is 2, is 6, and 7 is like 1 o'clock in the afternoon in your time or something. So that's how I think I got it. I think, whatever. All right, that's 6 hours, 8 hours, and 1 hour, 1 o'clock. Yeah, so I just should go 3 hours backwards. So yeah, so let me get this straight. If I go 3 hours backwards, so it'd be 11 o'clock your time. Got 11 p.m. All right, so I'm still doing that, right? Whatever, it'll be there. Will I still be talking at 4 or 5 in the morning? 4 hours. It's 3 or 4 in the morning. Then I'll go to sleep. You'll get up. All right, so, but it'll all work out. It'll work out. So, play platform in your site. Oh, it'll just, well, I'll post the videos will be posted on YouTube, and then they should, if they don't click on the freaking website, that's what I'm trying to work through. So I can find storage and it's a process here. I have to be all of everything. I'm my only type employee for all of this here. Talent engineer, gopher, kind of keep it simple. Get up in the morning, do a couple hours, and then go and do my thing. Do my clicking in that. So I appreciate your coming in and stuff. And then I'll get this all figured out for you, so it works out for my European folk. Because my whole 4 a.m. stuff should be, I'm trying to get it towards what's it, 7 hours is what, 11 a.m., 10, 11 in the morning your time or something. Whatever, I'll figure it out. If I get up at midnight, it'd be 7 a.m. your time. No, 7, 8, 9 o'clock your time. Yeah, it's 3 hours backwards. You're -9. All right. Okay, 9. Yes. Yes, dear. Yes, dear. I got you. -9. All right. So ciao, auf Wiedersehen, sayonara, hasta la vista, baby, and au revoir. And then I need to learn Italian. Yeah, that too. All right, and I'll talk to you again. Don't worry about it. And thank you for stopping by. And yeah, take care. I should get your email address, and then I can add you to when I when I do some of these freebies, like testing out. Oh, aren't you just quick to the punch? All right. All right. What am I looking for here? Oops. Oh, I need my pointer back. Cool. Let me see. I want to try something here while you're still on. Actually, I'll stop it. All right. Take care. And thank you again.